So I'll start with my own introduction plus what we are as Floater. So I am one of the co-founder here at Floater, and plus I am also a certified financial planner and retirement planner. Uh, so this session is about personal income tax planning, as I said, but then with more of data so that you will be able to understand it in a much better way. So Floater is a personal wealth care solution provider, and we have end-to-end application to do your personal financial planning, goal management, investment, insurance, tax planning, everything at one place. So what we say is that plan, set goals, start saving, invest, insure, and then of course, while you are doing everything, you should be able to monitor your goals also, because there are times when you need to take corrective action against your goals. So overall, if we look at it, this is overall product and solutions that we provide as a company. Most of these are through mobile apps. So the first one is about expense management, which helps you actually save more. As you learn about how you're spending, you will be able to save more based on some of the expense data that you will see. Then next comes financial goal planning, investing against those goals, and of course track it, progress, how the goal is progressing over a period of time, so that you will be able to take whatever corrective actions are required. And the third one is about security in terms of insurance actually. So we cater to three types of insurance: life, health, and motor. And the last one is about income tax planning for especially for salaried individuals, and also about tax filing, investment related to tax savings. All these things can be done with our team. All right, so let's look at the agenda today. So we'll first look at what are the income tax slabs, how a tax calculation is done. Then we will talk about how we should approach tax planning and learn about different type of exemptions, deductions possible under the different income tax sections. New and old tax regime. So for the last 2 years, there are two tax regimes. So we'll look at how both the tax regimes are different, and how to manage, how to do your tax planning under both the tax regimes, and also about which one you should choose actually. Then we'll have a tax case study where I'll be showing you how to calculate income tax and then compare between new and old, so that you can take a call about which one to opt for. NPS, I'll have a couple of slides about NPS, especially because this is unique in terms of the tax advantage that it offers. So you should rather understand a little better so that this benefit can also be availed. And then, live demo on tax planning I've spoken about. And then finally, we'll have about 15 minutes to take your questions as well. So let's look at how the tax slab looks like. So first, let's see the new tax regime, which is default from this year onwards. In new tax regime, if you're opting for it, then 7 lakhs of income is non-taxable. So that means if your income is around 7 or less, of course, you should be opting for new tax regime, because it will allow you to pay zero taxes. Now, what are the tax? The same thing when you look at the old tax regime, the zero tax applies to income if it is less than 5 lakhs rupees. Income in the sense taxable income. After all the exemptions that you have managed to take, the balance, if it is less than 5 lakhs, then you will be paying zero tax. So then there is a tax slab. How does it look like in new tax regime? So there are 6 slabs actually. So if your income is above 7 lakhs, then this tax slabs will apply. And let's say, for example, your income is 10 lakhs rupees, taxable income. Then you should start looking at the tax slab, and then you should calculate how much tax you will be paying. So for example, if your income falls in the range of 9 to 12 lakhs, so on that, 9 to 12 lakhs, that is this 3 lakhs rupees, you will be paying 15% tax, right? So similarly, if somebody's income is above 15 lakhs, so above 15 means if it is suppose 18 lakhs. So from 15 to 18 is 3 lakhs. On this 3 lakhs, you will be paying 30%. From 12 to 15, this 3 lakhs, you will be paying 20%. So it's the slabs are incremental. Okay. Similarly, if we look at the old tax regime, the slabs look slightly different. Here, up to 2.5, the slab rates have zero taxes. 2.5 to 5 lakhs, 5%, 5 to 10 lakhs, 20%, and then beyond 10 lakhs, income will be chargeable at 30%. Now, apart from this above tax slabs, there are additional taxes also for those individuals whose income goes above 50 lakhs in a year, right? So there are like 10% of surcharge, 15% of surcharge, 25% of surcharge. So if somebody is really falling into 50 lakhs, 1 crore plus kind of an income, then there are additional taxes. And whatever tax is calculated based on the above slabs, on that tax amount, there will be 4% of cess also, which is payable. So if, for example, total tax comes to 1 lakh rupees, then effectively I'll be paying 1 lakh 4,000 rupees. So this is about tax slabs, but I think you may be a little confused about it. So let's look at it in terms of an illustration that utilizing that tax slab, how will I calculate? So I'm taking an example of 30 years old where salary gross income is 10 lakhs rupees. Then 50,000 rupees of income is actually non-taxable for everyone, which means my effective taxable income becomes 9.5 lakhs rupees. Now let us apply the slab rates under new tax regime. So now you can look at it that my 9.5 lakhs has been split into each of the slab. So 3, 3, 3, and in the 15% slab, I have 50,000 rupees, right? My income is not more than 9.5. So I don't have any income under 20% and 30%. So based on this, I have calculated that my income tax comes to 54,600 rupees. I hope this is clear. Similarly, if I have to choose old tax regime, then how the taxation will be calculated? I will take the tax slabs of old tax regime. In this case, what is happening? My 9.5 lakhs income is split into 2.5, 2.5 and 4.5. I have nothing above 10 lakhs. So I don't have any amount under 30% bracket. In this case, what's happening? My total taxation is coming out to be 1,06,600 rupees. So what are you seeing here is that for the same income, depending on which regime I am choosing, my income tax are so different. In fact, what's happening is that in old tax regime, my taxes are coming out to be twice the amount that I would be paying under new tax regime, right? So question is, can I reduce my tax liability? Can I reduce my tax liability in old tax regime? Can I reduce my tax liability in new tax regime? So this is exactly what we will be learning today, right? Because there is a way to reduce my tax liability depending on how I am utilizing the various income tax laws for deductions and exemptions. So first thing is, what are the approach we should have for doing our tax planning? So the first activity that I should be doing is identify all the income sources. Because for calculating income tax, first I should know what is my total income. Because sometimes apart from salary also, I will have some or the other income, and it is important to find out all of those. Once I know about the income, I should approach to understand deductions and exemptions allowed under the different income tax sections, right? So here I'll be understanding how I can claim HRA, what is the benefit I'll get if I buy insurance, or if I'm traveling with my family. All these kind of scenarios I should be looking at, and then accordingly I will select whichever is applicable to me. And the last step is I will calculate my total tax under old tax regime and then under new tax regime also, correct? So that I will know which one will give me lower tax liability, because ideally I want lowest possible tax. So I'll be doing all these activities to arrive at that conclusion. So if we talk about identifying all the sources of income, what are the possible sources usually we will have? Maybe the first one would be salary. Sometime I might have any fees that I might be earning through some consulting, right? So those fees are also my income. I might have a house given on rent, so the rental income comes into picture. If I am investing in stock market or FD or any other mutual fund, there would be gain as well as loss. So whatever it is, that becomes part of my income called capital gains. And one thing which we all ignore is interest earned in the savings bank account, or interest earned in the fixed deposits, recurring deposits. Or if somebody is senior citizen, they might get pension also. So depending on all of these things, I'll be listing down my income across all the different category and add them. And then I will go to the next step, which is how to claim the benefits of tax exempted income. So when we talk about income, there are certain incomes which are non-taxable, which means without doing anything, I can claim exemptions on that. So let's learn about what are those. So non-taxable income will be usually part of your salary, or in some cases, it might be part of your flexi benefit, right? So in this, what happens? There could be many things like this. First one is house rent. So there are certain exemptions allowed for house rent if we are staying in rental house. Mobile and internet bills, if I get reimbursed against a bill, that amount will be non-taxable. If I am claiming fuel bills against a valid proof, if I am getting reimbursement under fuel allowance, that amount will be non-taxable. Then many companies will have a food card, so Sodexo card, right? So that amount which is loaded on my card becomes tax-free. Some companies may have some allowance for books and periodicals to purchase these books and periodicals meant for the job that I'm doing, right? So some of those expenses are again non-taxable. And then there is leave travel allowance, which we know as LTA. So there are certain criteria under which we can claim exemptions for the travel expense also. So please go and take a close look into your salary structure, into your flexi pay program, and then take all the benefits that is applicable to you, because these are giving you tax saving without much of an effort. What is the next step? I have already understood how much is my income. I have already segregated the income which can be exempted through reimbursements. Now the third step is that I should identify all the investments that is allowed as deductions. So there are multiple things that comes under deduction under different sections of income tax. First one, which is most popular, is section 80C. So this section is about investment. So when I invest in certain things, some of those investments are exempted. We claim deduction under income tax, right? So this section has subcategory also, like CCD1, CCD1B, CCD2. So what are the things which comes under this? First one is life insurance, mutual funds, principal paid towards home loan. So some of these investments are there which can be claimed as deduction up to maximum limit of 1.5 lakhs rupees. Right? Similarly, if I am paying in Atal Pension Yojana or National Pension System NPS, that also comes under the same 1.5 lakhs limit. Apart from 1.5 lakhs limit, I can also claim 50,000 of investment in NPS under a separate category called CCD1B. ATCCD1B, that is the third one. And there is additional benefit of NPS if the investment is done through corporate NPS channel. Here what happens? 10% of my basic salary, that can be claimed as exemption. Okay, and this under section which it falls is ATCCD2. So what this slide is trying to tell you, that there are multiple ways you can, or multiple investment instruments which you can choose, and those investments will be free from income tax. Second category is about medical expenses and medical insurance. So here what happens, the premium that I will pay for health insurance for myself, my spouse, children, and my parents, this premium will be exempted under 80D, plus some expense up to 50,000 rupees if I have a parent at home who is above 60 years of age and they don't have any insurance, because many a times senior citizens don't have an insurance. So in that case, they can claim actual cost of medical treatment up to 50,000 rupees, right? So this is how the insurance thing looks like. If I am taking insurance for self, spouse and children, 25,000 rupees of the premium will be exempted. If I am buying for my parents, another 25,000. But if my parents are senior citizen, then I'll be able to claim 50,000 rupees. If I am taking health checkup, that health checkup 5,000 rupees is again exempted under the same 80D limits. So overall exemption that I claim here is that if my parents are not senior citizen, then I can claim up to 50,000. If my parents are senior citizen, then I'll be able to claim more for parents insurance, right? So the maximum it can go up to is 1 lakh rupees. On the last two slides, if somebody has any questions, I can take it up right now.
Can you hear me?
Yes, please tell me.
NPS program
I can't hear you clearly actually.
recently there's a pension program happened. I think you only conducted that. So
Yeah.
that will comes under which one? ATCCD 1 or 2?
Yeah, here. So the last one, CCD2. So if the investment is through corporate NPS model, then that exemption comes under ATCCD2. Okay, so let's learn about how the benefits can be claimed for home loan. So if I have a home loan, I can claim two types of tax benefit. So the condition is that, first condition is the house is self-occupied. In this case, 2 lakhs of interest payable towards my home loan EMI is available as tax deduction, right? So this 2 lakhs will be tax free for me. If it is rented out, then actual interest, whatever it is, will be claimed as exemptions. But in that case, of course, you will have to show your rental income also. In addition to this, where our EMI is always a combination of interest and principal, correct? So the principal component of this EMI can be claimed as exemptions under the 1.5 lakhs limit of ATC. So if somebody has a home loan, most likely your ATC of 1.5 lakhs limit can be completed by way of this principal amount also. Many of us will probably start our new job and might have education loan also. Or if you are in your 40s, 50s, you might have loan taken for your children, their higher education and all that, right? So in both cases, we can claim exemptions under a section called ATE. How does it work? You need to fulfill some of this criteria for claiming the exemptions under this section. First one is, purpose of the loan should be for higher studies, either in India or abroad. Loan taken should be for self, spouse or children. Lending entity must be a bank or a certified non-banking financial company. Deductions can be claimed for the full interest that you are paying. Maximum deduction, there is no upper cap. And this benefit can be availed for 8 years during the repayment of the loan. Okay, so if someone does not have a loan, and if you're thinking, can I claim the school fees of my children as exemption? Then yes, the tuition fee can be claimed, but then this comes under the same ATC where limit is 1.5 lakhs. So if that 1.5 lakhs limit is not crossed for you, maybe you can utilize your children's school expenses also. There are multiple other different sections for which, it may not be valid for all of us, but then there are certain other deductions also possible, like of 1.5 lakhs of interest paid on loan for purchasing EV vehicle. So this benefit is also applicable, and this is applicable till the month of March 2023. So I think, yeah, this has already gone, in fact. Second one was for individuals below 60 years of age and interest earned on your savings account up to 10,000 rupees of savings account interest is non-taxable. If you are a senior citizen, then again 50,000 is the limit for bank interest, which will be non-taxable. And if you are into donating funds, and if you are donating it to registered authorized entity, then there are certain exemptions that can be claimed for different type of. So one of the category gives you 100% of the amount as exemption, and the second category gives you 50% of the amount as exemption. So whatever exemptions and deductions we were learning about, right? Let us compare which one of those are applicable in new tax regime and which one are applicable in old tax regime, right? Because they are both different. So if we look at the new tax regime, only these 4 things are exempted. First one is standard deduction of 50,000, employer PF, corporate NPS, and the last one is interest on home loan, right? For rented house. If you have taken a loan for a home and you have given it for rent, on that you can claim that interest amount as exemptions under the new tax regime. So if you want to have a single look of this comparison, this is how it looks like. Yeah, so just spend 1 minute on this. If you see under old tax regime, all of these different things are exempted. But if you talk about new tax regime, HRA, LTA is not applicable, ATC is not applicable, medical insurance is not applicable, home loan interest of self-occupied is not applicable, right? Self-investment in NPS is also not exempted. So the only exemption that you get is for corporate NPS, employer PF, and standard deduction, and home loan taken for house which you have given on rent. So if you try to understand the old tax regime, you can claim exemptions in multiple different ways, and overall you might be able to claim about 4.5 lakhs to 5 lakhs of your income as non-taxable if you go with old tax regime. If you are trying to do with new tax regime, then many of these will not be applicable. Now let's compare the investments which are allowed as exemptions in ATC and few other sections, right? So as you can see, the second column tells you about what is the expected interest rate that you will get in these investments, correct? Third one tells you what is the lock-in period, because every product might have their different lock-in period. For example, PPF has 15 years lock-in period. Sukanya Samriddhi has till the age of 21. A lot of other things are 3 years and 5 years. Risk factor. All these investments are of different types. So obviously there are certain risks involved also, whereas some are very low risk, some are high risk, some are moderate risk. And the last column is very important. Please take a look at it, because whenever I'm opting for one investment, we often ignore the fact that my maturity amount will be taxable. That means the profit that I generate from this investment, whether that is taxable or not, that is also very important. So if you look at the last column, 3 of them are taxable, that is FD, Senior Citizen Savings Scheme, and National Savings Scheme. So if you are investing in any one of these 3, you should know that whatever profit you will generate will be taxable at your income tax slab rate. So if you are in 30% bracket, you will be paying based on 30%. So in that respect, NPS is very good. You don't pay any taxes. Sukanya Samriddhi, you don't pay any taxes. EPF 0 tax, PPF 0 tax, NPS 0 tax, right? So you should choose your product based on all these factors. So if just because your friend is investing in one of this, that may not be suitable for you also. So take your own decisions by understanding how the various parameters are playing a role in your investment. Quickly, I will explain how the unique benefit is available in NPS. Okay. So in NPS, let us first understand when I am personally investing in NPS, that is called self-investment. So self-investment in NPS comes under 2 different categories, ATCCD1. So this CCD1 has upper limit of 1.5 lakhs, which is inclusive of other things that comes under ATC. So as an example, if my company PF is 60,000 plus I have PPF and other insurance things also 60,000, then my balance 30,000 can be invested in NPS, and I will be able to claim full 1.5 lakhs of exemption. This is first section, which is CCD1. If your 1.5 lakhs is already exhausted, then you can invest another 50,000 rupees, which will also be exempted. So first and second both can be claimed, depending on whether your 1.5 lakhs limit is balanced there or not. Then there is third category, which is 80CCD2. In this, you will be investing 10% of your basic salary, but through the corporate channel. That means this amount will be invested by your company into your NPS account, and this amount will be tax free. So if I have taken an example of 7.5 lakhs of basic salary, then 75,000 investment will be done in my NPS account by the company, and this amount of 75,000 will be tax free. So how much I am able to claim in old tax regime? I am investing 75,000 under corporate NPS, 50,000 under CCD1B, and 30,000 under CCD1. So I am able to claim 1.55 lakhs of exemptions just by way of NPS investment. But if I have chosen old tax regime, if I have chosen new tax regime, then my investment of 75,000 through corporate NPS will be exempted. Other two will not be exempted. And then NPS has zero long-term capital gain tax. So this will be additional advantage at the time of maturity. So now the question is, there are so many investments and exemptions, which are the most appropriate ones for me? So we often get confused because I think I have shown you roughly about 10 different types of investment which are allowed as exemption. So how do we opt for it, right? So here are 5 top things that you should look at before you look at any other thing. What is the first one? Term insurance. So first go and buy a term insurance of 10 to 20 times of your annual income. This will not cost you much. Depending on your age, it will cost you anything between maybe 10,000 to 30,000, 35,000 rupees. Okay, for a cover of 1 crore to 2 crore. So this is essential for everybody, irrespective of your male or female, doesn't matter. Okay, so go ahead and do this first. Second thing is that health insurance. You might have health insurance by your company, but I still recommend to buy your own insurance of, if not more than at least for 5 lakhs, which will act as a backup in any other emergency situation. Also do it for your parents if they are not having any insurance, right? If they are in private job or retired, you should buy a health insurance for your parents also. And overall, buy a top-up insurance of around 25 lakhs or more. So this will help you, this too will help you protect against any emergency situation. Then look at investing. If you start looking at investing, the first thing you should look at is PPF. You can go to any SBI branch, or I think most of the public sector bank, or even these days ICICI Bank also gives you, post office gives you, and Sukanya Samriddhi if you have a girl child. So these two should be your first 2 priority for investment after you have already done the insurance part. Then fourth can be your NPS. So start contributing in NPS on your own first. Even if your company has not offered corporate NPS, start with your own contribution of 50,000 because that will be exempted. And go and ask your company that they should offer corporate NPS to employees so that you can take the benefit of corporate NPS contribution also, right? And the fifth one you should look at is ELSS mutual fund. Correct? Because this will potentially give you a returns of around 12 to 15%, and the lock-in period is also only 3 years, right? So the last one is one which will give you higher growth. NPS will give you zero tax on maturity also, plus 3 different ways of tax exemptions. PPF and Sukanya Samriddhi will give you fixed return, plus the maturity has zero taxes, right? And health insurance and term insurance will give you the required protection against health risk as well as risk of death. After you have done this 5, you are probably free to look at any of the other things, but maybe these five, after these five, you may not need anything else for tax benefit point of view. Now, what should be my choice when I'm choosing my old or new tax regime? This could be one question that you have, right? So let's understand this with a case study using an Excel sheet. Okay. So do you see my sheet here? Maybe one of you can answer.
Yes, we can see.
Okay. So here what I have done is,
No, wait a
this is
sec. We
this
see
is
your
a
screen.
detailed.
We see your screen, but not the Excel.
Oh, is it? One moment.
Yes, same here. Yes.
1 minute. Just let me 1 minute.
Here.
Is it visible now?
Good.
Okay. So yeah, this is a tax planner, and good thing is that a version of this is on our mobile app also. But for explanation, I am using this Excel sheet. So what I'll do is that I have started with a gross salary of 7.5 lakhs. Okay. Now take a look at the last 2-3 columns here. 7 lakhs, 7 lakhs, 54,600. So what do you see is that if my gross income is 7.5 lakhs, my taxes under new tax regime will be 0. But if I opt for old tax regime, my tax will be 54,600. Correct? So hence, it's very simple decision that if I have an income of 7.5 lakhs, I will opt for new tax regime. Now let's take an example of 15 lakh salary. What do you see here? That taxable income in both the categories are 14.5 lakhs because 50,000 is exempted as standard deduction. But do you see the tax here? In old tax regime, I am seeing tax of 2.57 lakhs, but in new tax regime, I am seeing a tax of only 1.45 lakhs. So just looking at this, you might feel that you should go for new tax regime. Correct? But this is where your tax planning skill comes into picture, and you should not just decide just because of you're seeing 1.45 versus 2.57. You should start looking at exemptions and deductions. So first exemptions, let us say mobile bill, broadband bill, fuel bill, food card. Normally mobile will be 1,000, broadband maybe 1,500, fuel. All this together, let us say it is 6,000 per month. So in a year, how much will it become? 72,000. So as soon as I enter, please take a look at the last column. So my taxes have gone down. My taxable income has also gone down. Correct? Now it is 2.34 lakhs versus 1.3 lakhs. Let's do something more. I am paying home rent. Let's say 25,000 per month I am paying home rent. So 3 lakhs for the year. You please look at again column taxable income under new and old. Okay. What do you see? My taxable income in old tax regime has gone down, but it did not go down in new tax regime. Why is it so? Because HRA exemption is not allowed under new tax regime. Right? So I'll just make it 0 again and you see 13.78 both are there, but now it has gone down to 10 and hence my tax immediately has become almost equal. 1.41 versus 1.3 lakhs. LTA claim. Let us say I will have a family travel this year and maybe I'll be claiming 50,000 rupees. Right? Now this LTA is also not allowed as exemption in new tax regime. Hence, taxable income in old will change, but not in new. Now with only these three things, old tax regime tax has gone below new tax regime. Clear? Now let's take the benefit of ATC limit of 1.5 lakhs. So I'll be investing across multiple things and claim 1.5 lakhs of exemptions. Now this exemption is also not allowed under new tax regime. Hence, my taxable income remains same in new, but it changes to 8.78 in case of old. And now the tax in old has become 91, but in new tax regime, it is still at 1.3 lakhs. Medical insurance, 25,000 for self and 25,000 for parents. So I am claiming 50,000. This is also allowed for exemption only in new tax, old tax regime. So my taxable income has become 8.28. Self contribution in NPS 50,000. This is not allowed as exemption under new tax regime again. So my old tax regime has become 7.78. And you also see how the tax is changing. Right? Now comes corporate NPS. 10% of basic will be maybe 1.5 lakhs. Right? Sorry, it will not be 1.5 actually, 75,000. So I am taking a basic of 7.5 lakhs. So corporate NPS will be 75. Now, if you take a quick close look at new tax regime, taxable income, that will also change because this investment is allowed as exemption in old as well as new. Okay. So my tax has become 55,000 in old tax regime and new tax regime has 1.15 lakhs, which clearly says that I should be opting for old tax regime if these are the way I am able to do my tax planning. Correct? Now let us say I have some education loan also. Right? Let's say I have an education loan where I am paying 2,10,000. Interest part I am talking about. Okay, annual interest in education loan is 2.1 lakhs. Now you see, this exemption is not allowed under new tax regime, but allowed under old tax regime. And now that has become 4.93 lakhs. And we learned about 5 lakhs of investment in old tax regime is tax free. So my tax has become 0. That means 15 lakhs of my income I am able to convert 15 lakhs of income into 0 tax if I have all these things. So you might argue that I may not be able to do all these things. Perfectly okay. But point is, you should do everything that is possible for you and accordingly claim the tax exemptions. For example, I don't have a home education loan, right? Of course, then I will be paying 55,000 of income tax. Perfectly okay. All right. So this is how your tax planning should happen. And then you should go and decide which regime is good for you. So I'll come back to my slide where, so this slides are nothing but explaining the same thing. So ultimately the outcome is that look at all possible exemptions in both regimes and then evaluate your tax and opt for the appropriate one. Okay, so that kind of completes the topic. So quickly, as a tax saving solutions, what are the things that Floater offers? So we have NPS, tax saver mutual funds are there, term insurance can be done with us, medical insurance can be done with us. The first two can be done through the app itself. Second, third and fourth can be done. For this, you have to reach out to us and our team can help you. This is a quick look at our mobile app. This is free to register with a lot of financial planning tool incorporated in this. So there is a tax planner, there is an advanced retirement planner, life insurance planner. So life insurance planner will basically tell you how much life insurance you should have, whether it should be 50 lakhs or 1 crore or 2 crore, you will be able to calculate it. And then there are other financial planners, goal planning tool also. When it comes to the tax exemption side, then mutual fund, NPS and insurance can be done with Floater, right? And our app is on both Google and App Store. you could explore that. All right, so we have come to the end. Please come up with your questions. I'll be able to answer, and I can go back to any slide if you want. But in the meantime, this is one user group we have, Floater user group, WhatsApp group. You can join this, and later on you will be connected with us. You can ask questions there as well. Plus, we also share any other informative information about financial planning and wealth management, tax planning. So you can keep connected. And this QR code is for downloading the app. Yes, please come up with your questions.